In today's world, there's no doubt that financial literacy is one of the most important skills to have. It is, however, not a topic that's always discussed in schools, though we are doing better and better on this front with time. The problem is that will not be much use to those of us who left school already. Thanks to the proliferation of blogs, podcasts, YouTube channels, and other outlets, people have been able to learn more easily about finance outside of the traditional educational system. Hello everyone and welcome back to the Finance Guardian channel. Today, let's talk about how becoming financially literate can make a huge difference in your life. Hit that subscribe button and the bell beside it, and let's get started. So, what is financial literacy? Financial literacy includes knowledge of credit, debt, and financial matters, all of which are necessary to make financially responsible decisions, which play a significant role in our everyday lives. As part of financial literacy, one should understand how to pay off debt, make a budget, and understand the difference between a variety of financial instruments. Ultimately, financial literacy plays an important role in helping families balance their budgets, buy a home, fund their children's education, or prepare for retirement. People from both developed and emerging economies suffer from a lack of financial literacy. Every nation in the world, from Brazil to Bulgaria to India, has consumers who do not understand basic financial concepts. Although financial literacy may vary depending on education and income levels, research suggests that highly educated consumers with high incomes may be just as clueless about financial matters as less educated, lower-income consumers, though overall, the latter tend to be less financially literate. At the same time, the idea of personal finances often causes anxiety for many people. The Organization for Economic Cooperation and Development, OECD, reports that people find choosing investments for retirement plans to be more stressful than going to the dentist. Why is financial literacy important? In addition to managing money more confidently, financially literate consumers are better able to deal with the inevitable ups and downs of their financial lives by understanding how to prevent and manage issues as they rise. It could be as simple as keeping watch over their bank and credit card accounts so they can spot any potential fraud as soon as possible, or having ample cash saved to cover a costly unexpected car repair. Then again, financial literacy can assist consumers in saving diligently for things that are important to them, such as a vacation or their children's education. Trends that make financial literacy more important. Consumers are likely to face more difficulty making financial decisions as a result of financial illiteracy. There are 4 trends converging that support the value of making thoughtful and informed financial decisions. Number 1. A few groups might be lagging behind. The playing field is far from level when it comes to financial literacy. The Financial Industry Regulatory Authority, FINRA, study found that though the economy has grown and employment has increased in the past decade, the gap between the haves and the have-nots might still be widening. In addition, the study discovered disparities among different ethnic groups, with white and Asian adults showing better proficiency than Black and Hispanic survey respondents. 3.2 out of the study's 6 questions were answered correctly by white and Asian adults. Hispanic adults answered 2.6 out of the 6 questions correctly, while Black adults answered 2.3 correctly. Younger people are also affected by this disparity. The 2018 PISA study found that 15-year-olds from white and Asian backgrounds had significantly higher financial literacy scores than the U.S. average for all students tested. Hispanic and Black students, however, had lower scores. Number 2. Consumers are taking on more financial responsibility. A key example of the increased responsibility Americans face in protecting their own finances is retirement planning. Generations before us relied on company pension plans, now known as defined benefit plans, for the bulk of their retirement. Companies or governments that sponsored these pension funds had to shoulder the financial responsibility of managing them. The consumers were not involved in decision-making, rarely contributed to their own funds, and rarely knew the pension funds' funding status or investments. Nowadays, pensions are more of a rarity than a norm, especially for new workers. It's more common for employees to be offered participation in 401k or 403b plans where they must choose how much to contribute and how to invest their money. Past generations relied on Social Security as a source of retirement income, but the benefits offered by Social Security today do not seem adequate to many people. What's more is that the Social Security's Old Age and Survivors Insurance (OASI) Trust Fund, which is the source for retirees' benefits, may be exhausted by 2033 according to its Board of Trustees. Various proposals have been made to strengthen Social Security, but the uncertainty only increases the need for individuals to save and plan for their retirement years. Number 3. Savings and investment options have become more complicated. Consumers are now offered a wide range of investment and savings options. These products are more sophisticated than they were in the past, requiring consumers to choose from a variety of options with varying interest rates and maturities, choices they are often not adequately prepared to make. Buying a home, funding an education, or saving for retirement can be impacted by these choices, adding to the decision-making pressure. Furthermore, the sheer number of institutions offering products and services can be overwhelming. Consumers are confused by the number of financial services companies competing for their assets, including banks, credit unions, insurance firms, credit card companies, brokerage firms, mortgage companies, and investment management firms. Number 4. The financial landscape is changing. Finance is a dynamic industry. Having become a global market, it has many more participants and many more influencing factors. With technological advances such as electronic trading, financial markets are becoming even more volatile and swift. When these factors are combined, they can create conflicting views and make it more difficult to create, implement, and follow a financial roadmap. How to become financially literate. You don't have to let your fear of jumping into the financial world or the belief that you aren't good with money stop you from gaining financial knowledge. You can take small steps, and these are resources that can help you along the way. Seek out free resources. Start by using free tools that you may already have access to. For example, the website or app of your bank, credit union, or credit card issuer may track your spending patterns. Several banks and Experian also provide free monitoring of credit scores. You can use these tools to get an idea of where your money is going and how your credit is faring. Consult your employer. Check with your company to see if they offer free financial counseling or employee financial wellness programs. As part of your employment benefits, you may have access to a financial professional, which can help you determine which areas of your finances need the most attention, such as saving, retirement, budgeting, or debt reduction. Check out credit counseling. Credit counseling agencies offer help as well, since they employ counselors certified in budgeting and debt repayment techniques. Working with a financial advisor, such as a certified financial planner, may also be beneficial for you if you have the means. They can assist with financial goal setting, tax planning, college and retirement savings, and debt repayment. Look for an experienced certified financial planner in your area, or use a database such as the XY Planning Network or the Garrett Planning Network to find one remotely. Look for resources from reputable nonprofits and agencies. They can teach you the basics about finance at your own pace. Here are a few suggested organizations. The Consumer Financial Protection Bureau. This federal agency offers many online resources for consumers, including guides on how to make major financial decisions, like paying for college and getting an auto loan. The Financial Planning Association. This membership organization for financial planners offers resources with information on various life events and complex financial topics, including divorce and estate planning. The Jumpstart Coalition for Personal Financial Literacy. Jumpstart is a network of nonprofits that's offering financial education to K-12 students. It also maintains a website with a wide range of free financial literacy resources. The National Foundation for Credit Counseling, the NFCC. The NFCC affiliates provide credit counseling in person and over the internet. The NFCC website also offers free tools and calculators that can help you plan your finances and retirement. The power of financial literacy. Your commitment to financial literacy will ultimately lead to a greater sense of self-confidence. Having all the information you need to make informed decisions will allow you to avoid going into debt or investing with too much risk. You can then create and pursue financial goals that will best support your vision for a happy life. And that's all the time that we have today, folks. We hope you enjoyed this video, and if you did, please do remember to hit that like button. If you're new around here, welcome. Please subscribe to our channel, and on your way out, please do remember to click on that bell icon too, so you can remain updated about all of our future videos. You're welcome to the channel where you will learn the basics of personal finance in easy to understand language. We'll see you next time.